According to Bankrate, 75% of homes on the market are overpriced. So they kind of, and I was like, what does that mean? Reading into the article, it basically said like they can't afford the house. So 75% of homes that are purchased on the market right now are not purchased by people that could actually comfortably afford the homes. So that was interesting to me. So it was like saying the typical U.S. household earns about $80,000 per year, but 75% of the homes on the market would require a household income closer to $113,000 to qualify without being financially stretched.
Wow.
So that was interesting to me. And it's not surprising, but I was kind of surprised to see actual numbers to it.
Yeah. Do you feel that with your clients? I mean,
oh yeah,
people are just stretching.
I think we all do. Yeah.
Yeah. Well, they're allowing up to 48% debt to income now, which is crazy.
I was actually just talking to a friend about this. We've always seen, we can preach until our ears bleed. Like, don't buy a house at the top of your approval letter. Mm-hmm. Get it somewhere in the middle, maybe even to the low end if you can find something. I think the issue right now is people have to stretch to the top because they have to have a house that is financeable with their loan type. So it used to be, maybe you didn't get a laundry room or you didn't get a pantry or, maybe there was 2 bedrooms instead of 3. You had to sacrifice some things, but now it's like you actually have to spend more to qualify for a house because that house is just costs more now.
Yeah.
Well, a house on the country club now is now a double wide on an acre. What used to be a house on the country club.
I see.
350, something like that. Now you're buying a double wide with a couple acres.
Yeah.
Right.
Yeah.
I mean, the prices are getting crazy.
Yeah. But it's all relative though. I mean, it really is in the sense that, I just remember in the early 2000s going, wow, that's $150,000. Like, I cannot believe that house just is not worth $150,000. And, 20 years later, I'm like, I'd give anything to buy that house for that price.
$245 is the new $150, I feel like.
Yeah,
Exactly.
It really is. I mean, and that's the thing is that the perspective changes over the years. So the asset stays the same, but the value obviously floats to the new water level.
I would like to say, though, that stat that you just pulled out is an indicator of that 2008 bubble where people can't afford their homes.
I think that's different, though, because that was, lending, if you were getting $1 million house rather than having people be stretched to the top, it means they still can't afford it. They just can't afford it quite as comfortably.
And those loans aren't going to move. Yeah. Whereas before, people's loans were moving and that was something they couldn't control. So they're stretched, but hopefully they'll grow into those payments or they can just stay stretched for a while until it's comfortable.
Yeah.
Yeah. The double whammy is you stretch on your payment and then groceries and utilities and those things continue to go up. And now you're in a pickle. Mm-hmm. In fact, the stat that I just saw earlier today was pretty shocking. It said the hidden costs of homeownership soar to an average of $1,783 a month across America.
Yeah, I could see that.
And that would be your taxes, your insurance, and your utilities combined.
Oh, just that? Not even not
including the mortgage?
I'm not talking about the mortgage. I'm talking about like repairs and stuff too. Does that include repairs?
Oh, it's property taxes, insurance, and utilities. The average cost in America is $1,800 a month.
That's steep.
I mean, that is a house payment.
It is, yeah.
You know what I mean? So it's incredible. That was one of the big things that came out was it's not just your monthly payment. It's everything else that's involved. Those are pretty surprising.
Your roofs are a lot more too. Your heaters are more. Everything's more.